Okay, this is chapter 7 where we're going to talk about accounting for business type activities, proprietary funds, internal service funds, enterprise funds for state and local governments. Okay, so what we're going to cover in this chapter are proprietary funds and the two types of proprietary funds. That's internal service funds. Going to cover some issues with those, and the other type of proprietary fund are the enterprise funds. And lastly, we're going to cover financial reporting requirements for proprietary funds, both at the fund level and the activity level for proprietary activities in the government-wide financial statements. The two types of proprietary funds are internal service funds and enterprise funds. The main similarity between the two is that they both rely on exchange transactions. They give something, they provide a good or service and are paid in return. It's not a one way type of transaction. The main difference is the customers they serve. Internal service funds, their transactions are with other parties within the government, while enterprise funds, their transactions are with parties outside of the government. Internal service funds, these are used to account for production and distribution of centralized goods and services that are provided to other agencies or other departments in the government or to other governments. And this is done on a cost reimbursement basis. Because of this, the GASB requires that they're reported in the governmental activities column at the government wide level rather than the business type activities column. And some examples of internal service funds, these are funds like the print shop, motor pool, physical security that sells locks and doors and things like that to other governments that's required to kind of maintain itself and balance its budget. Funds are used to restore, purchase, issue supplies to other funds or departments within the government. So the main issue with the internal service fund is how much internal service funds should charge other departments. They need to be cheaper than the price outside vendors can offer, because if they're not, then there's really no reason for a print shop that's internal to the government to exist. They might as well go to an outside Speedy Print or something like that that can do it for cheaper. And so at the same time, the internal service fund needs to recover all its cost. It needs to be self-supported. So if it's not, then again, the government needs to ask itself, well, do we really need to be in the business of doing printing if an outside party can do it cheaper? Enterprise funds are used to account for activities that produce goods and services to be sold to the general public. Activities are for enterprise funds from a financial reporting standpoint are accounted for at the government wide level as business type activities. Unlike internal service funds, if you'll remember, which are accounted for as governmental activities. Some examples are municipally owned utilities, mass transit, toll roads and bridges, airports, parking facilities, lotteries. Like internal service funds, these are expected to be self-supporting, and that includes capital cost. So they're expected to cover the cost, all their cost, with fees or other charges to the user of the service, and aren't expected to need tax revenue, most of the times by law, in order to operate, in order to fully fund itself. Proprietary funds, when it comes to financial reporting, they have an economic resources measurement focus, which means, like for profit businesses, they're going to use an accrual basis of accounting. The required financial statements for proprietary funds are a balance sheet or otherwise a statement of net assets, a statement of revenues, expenses, remember not expenditures, because of the economic resources focus. So a statement of revenues, expenses, and changes in fund net assets, as well as a cash flow statement. On the balance sheet, there's no owner's equity, but it has a net assets section, which is assets minus liabilities. Then there's a caveat to that. The three sections of net assets, which are required to be disclosed separately in this section, are invested in capital, net of related debt, which is interesting because that's a liability that's being pulled down into the kind of the equity section, the net asset section, and that's the gross capital assets minus accumulated depreciation, less any debt related to the capital assets. And the assets minus accumulated, of course, is the book value, and then you're going to subtract the debt-related capital assets there, which is an interesting twist on uh, what's being presented there. There's restricted net assets that have restrictions on the use of those imposed by law or external parties, and there's unrestricted, which of course is the remainder of the net assets. So the other two required statements are the statement of revenues, expenses, and changes in fund net assets. And again, I stress expenses here because they're using an accrual basis instead of the modified accrual like the governmental funds use. Uh, and it looks a lot like a for-profit business. It has operating revenues and expenses and non-operating revenues and expenses. The statement of cash flows, it GASB requires the direct method to be used here, not the indirect method where you start with net income and then you kind of back out all the changes in your assets, things like that. Um, and unlike for-profit, uh, governmental proprietary funds have four categories on the cash flow statement. And basically, it's the reason is because the financing section is broken up into two. It's broken up into the non-capital project capital asset section, where it's everything else, and then there's a specific to capital and related financing section where these are financing activities that are clearly attributable to the acquisition, construction, or improvement of capital assets. So you've got four sections there for proprietary funds, unlike for-profit businesses under FASB, which only have three. There are not a lot of differences in how the internal service, I mean the proprietary funds are reported versus the government-wide financial statements. They use an accrual basis of accounting again, because they have the economic resources measurement focus. And except here, there's only two financial statements. No statement of cash flows. You've got the statement of net assets and the statement of activities. The important thing to remember here is, again, as we mentioned earlier, the internal service fund internal service funds are reported in the governmental activities column of the government-wide financial statements, as opposed to the enterprise fund, which is reported at the business type activities column. And again, the reason for that difference is because those internal service funds service other governmental departments, while the enterprise funds are those that service those customers outside the government.